Live, we're live, and we're live.
Hey guys, welcome to this webinar, which is going to be spectacular. We have a tremendous arsenal of geniuses here. We have the great Anna Hill, the great Arya Scheinbein, the great Christos Georgiakis, the great Mitchell Lipp, aka Harvey Specter, and the one and the only KIB. We have none of us claim to be experts on these topics, with the exception of Anna, who of course is.
Well,
But we'll do our best. We'll do our best to give you as much information as we have with regards to knowing your numbers, cash flow, accounting, and anything to do with finances or numbers related to your Amazon business. Welcome everybody. Anna, you're up first.
okay, thank you. This is my soapbox here. People knowing their numbers, and I think this all happened because someone was frustrated where they didn't understand how to manage their cash flow, how to understand what to save for taxes, what they could spend on inventory. So I think this is a great idea, Sam. Thank you. Um, the answer to the question actually is this, and I can share this later. It's the cash flow statement. So if you have your books in order, which means you have a balance sheet and an income statement, what the cash flow statement does is tell you what your uses of cash are. And we can talk more about it later. I don't want to hog the floor. But if you really understand what's going in your business and what the results are, think of your business like a body, and money is energy, like calories. You know how to be healthy. You have the same responsibility to your business to treat money that way. Understand what goes in, what the quality of it is, what you're spending it on, and what the results are. That's really the secret to it. And the cash flow statement right here, this is the tool that you need to understand what your cash flows are. And once you understand that, then you can plan and strategize, save, spend more, spend less, and it answers all those questions that people were frustrated about. Then we're done.
That piece of paper looks like Harry Potter's map to me.
No, it's really not, and I can talk more about later how it specifically works. We have a great group here, and I want to hear what other people have to say. But essentially, it's taking the cash inflows and outflows for the year and understanding what they were for and how they helped the business and what you could use them for a little bit differently to manage your cash.
So I just want to say I handpicked these 5 people specifically because I consider them a lot smarter than me when it comes to these matters, and I'm not an expert on teaching these matters. These 5 people that are here with me are a lot smarter than me on these topics, and unfortunately I still do most of everything I do in my head, which is very hard to translate to a company of 15 or a company our size. So I'm hoping the people that are here can add a lot more value than I can. KIB, what do you got for us? Karen?
Yes.
You're up, my dear.
Oh, I'm sorry, I didn't realize that.
Sorry.
Well, it's probably okay that you picked me to go next then, Sam, because I'm not going to show you up in any
Ladies
way.
first.
I hate to say it, but I'm probably more like you than you think, or maybe I should be glad to say it. I have a pretty good intuitive understanding of what I'm doing because I built this business slowly over a period of time, but I don't have pretty books to look at. Something that I find absolutely fascinating is that there is stuff that I know, and I kind of think until recently I'd assumed that everyone just sort of knew it. And it turns out they actually don't. And I don't know who you were planning on going to next, but Mitchell or Harvey has been, he has the ability to take the stuff that we just kind of know in our heads, the product analysis that we do when we see something, and actually explain what that formula that we're running mentally is. But I don't have anything to offer except that if you are an intuition or gut-based seller, or your intuition. That's something I learned the hard way, is that if I start cutting corners by listening to what other people tell me to do, it doesn't work because I lose that competitive edge of just knowing. And when you have a proven track record and you do just know, if you stop taking your intuition seriously, then you're going to lose it. It's going to cheat on you and you won't be able to trust it. I don't know if that makes any sense at all. I'm happy to answer questions. But as I say, I'm not sure you really wanted me on here to.
No, I definitely wanted you for your infinite wisdom and your common sense approach to business. There's a lot of value in what you just said in the intuition and being entrenched and immersed in your business where you know things intuitively. I think once you start to outsource your business, you sort of lose touch. I was just talking to somebody here in my office about 20 minutes ago. He was telling me about a friend of his who has 15 Verizon stores, and he just sold them for millions of dollars. And he said as soon as he started doing other businesses, he took his eye off the ball, and the businesses suffered because of it. So he ended up selling his business to focus on other businesses. But I think that means a lot. You know, knowing things intuitively makes all the sense in the world to me. You know, I know my business. I know what it's capable of. I know how much money we have coming in. I know how much money we can spend. And for the most part, you know, I do a good job of juggling and balancing. But I'm not an expert at teaching other people to do it. That's a weakness that I have. And Jay is actually better at coaching our clients. You know, we tell clients, you know, you got to buy shoes. You got to buy shoes. And, you know, we bought probably 30,000 pairs of shoes since last June, which is insane if you figure an average cost of $40 to $50 a pair. Jay tells the clients, you know, put aside $5,000 of your budget, buy that amount of pairs of shoes, and when 2 pairs of shoes sell, you could replenish it with 3 pairs of shoes. So he has a much better balance than I do, and that's why I defer to him when coaching our clients on how to spend their sourcing budget. Harvey, what do you got for us?
Hey, thanks for having you're part of this, Sam. I guess kind of like you and Karen, I don't have perfect pretty books. It's more conceptual. It's more in my head. I guess you know what I may be able to offer is that you know, we see people posting sales numbers, people posting, you know, all kinds of things, and the next thing you know, they're questioning, well, what's your profit, what's your margin, what's your ROI, things like that. And I find to really analyze your business, it's important to realize there's, you know, 5 to 10 factors of business health, and that's kind of how, you know, I like to measure my business. I wrote a piece a couple years ago when I first, you know, did a lot of sales on daily inventory turnover, because, you know, your sales really don't mean anything unless you look at them as a function of your sellable inventory.
I remember that well. I remember saying, hey, I don't know what that number is. Let me figure it out. Once you did that post, and you were, I think, at 1.5% per day or something.
Yeah, that's pretty close. Yeah.
Okay.
And so then I've learned how you have to apply those numbers, you know, as you grow. And then also, I mean, you can have a profitable business on paper or a business with a good accounting profit that isn't necessarily healthy. You can be carrying a lot of dead inventory, which shows up as a lot of assets on your balance sheet, but those assets either A, may not be sellable, or, you know, diminishing in value, you know, by the day if they're expirables, or you know, electronics that gradually lose their value. So there's a lot of different ways to look at, and must be looked at for the health of your business, not just, you know, total sales, you know, accounting profit, things like that. So I'm more than happy to participate in any kind of, you know, conceptual financial conversations and things like that. But as far as the the actual accounting that Anna handles and how to make your books pretty, that's not what I'm good at.
Okay. So I think a lot of clients are asking, what do I do if I come into a lot of money, whether it be an Amazon loan or a Cabbage loan or some other, my in-laws want to help me in business, grow my business, and they're talking about giving me 5 or 6 figures to help me grow my business, and they're not sure the best way to deploy the capital, and they're not sure the best way to figure out how much is coming in and how much is going out. I think Christos and Arye are probably the two of us outside of Anna that are the most analytical. Maybe they can share a different angle on this. Christos, what do you got for us?
I mean, I don't know if I'm really analytical per se. I just kind of keep track of things, and I just, I mean, RA will post something, and I have no idea what the hell he's talking about. Same thing with Harvey, but I just kind of I've had my own businesses for almost 20 years, and I've been using QuickBooks Pro 2002 for almost 20 years, and I stick with it, and I know how to do it, and I just figured out how to do inventory with very little inventory with some of the businesses I've had in the past, and then I started on Amazon, and all of a sudden I've entered in 7,000 plus SKUs one at a time in the last 4 years, and and I kind of have an inventory now, and that's just how I keep track of things. When I buy something, my SKU is the ASIN, and I enter it in, and boom, and there you go, and I can always run an inventory valuation in QuickBooks, and it's not always perfect because I have a system for taking the flat file V2 and importing it as a sales receipt, so the sales get entered in that way. But of course, Amazon's flat file V2 puts in weird transactions for like partial refunds and stuff, which screw up the accounting sometimes. But it's not perfect, but you just kind of go through and adjust it here and there once in a while, and it's pretty close. I think a lot of the questions I saw in Ace Group had to do with cash flow in the sense of, I don't know. I don't know if you realize this, Sam, but I've been doing a lot of coaching calls, and I don't know. Mostly it's me getting coached by other people just the last month or so. And I think a common question I get from a lot of Ace members is, okay, I'm just starting out at this. Like what do I do? And I always tell them, go call Sam and Jay and ask them, because I really have no idea, because the stuff I did 4 years ago when I started out won't work now,
Right,
Back
right.
then you could buy whatever you want from Disney Store and get 100% return. I mean, that doesn't happen anymore.
Right.
And I also kind of began this from a different position than other people, I think. I think a lot of people, I don't know if they've quit their jobs too soon, or a lot of people are doing this full-time. I mean, I'm not doing this full-time still, and I'm 4 years into this, and I did over $3 million last year. And I think the reason I've been successful is because I have income, and I don't really need the money. And and even though I pay myself a salary, like a regular salary, like literally I don't see any of the money. I withhold 100% of it. I don't even care. And and I know every accountant, including Anna Hill, will call me an idiot for doing that. But I don't know what the hell my profits are going to be at the end of the year, so I try to withhold as much as possible, so I don't have any trouble with the IRS. And I mean, I just got a tax refund, which is more than probably half the people in America make. So,
Wow.
But it is what it is. So. But that works for me. To me, it's the same thing as putting money in a savings account. I'm just going to be earning 0%, and that's another thing that's helped me is I always have cash on the side. So it's like I've never really run out of money except in Q4 in 2014 when Amex cut me off, and then I pulled money out of my savings account, and my wife almost divorced me because of all the stuff. But then it all got replenished 2 months later because that's Q4.
Exactly. Amex revisited my credit lines on December 25th of 2014. And I owed out about $300,000 at the time. And I was like, you picked the one day of the year where I have, by January 10th, everything will be paid off. So I don't, or by December 31st, everything will be paid off.
Well, they cut me off 2 years in a row in October, right when I was about to go on a spending spree, and it's just been funny to me. I mean, because it was funny because last year, literally, I went through underwriting with them to actually get a credit line on my Plum card, and they're like, okay, fine, you can have $200,000, and then literally 3 months later, they cut it down to $50,000, just like that.
Wow.
What the hell did I go through underwriting for? These assholes. Whatever.
Before we switch over to Arye, I just wanted to touch on one thing that everybody, obviously your V2 files are Sputnik to most people. You do a lot of buying deep as opposed to us who pretty much buy wide.
Okay, I mean, to me, it's all about leveraging your time. And you got to understand that you have a completely different business model than me, Sam. I mean, you have all these guys who go shopping for you. You can send them out, and they're going to go and, they're going to go and buy one pair of each size of shoe. And I'm just like, I can't do that. I source like 2-3 hours a week sometimes at the most, sometimes 0 hours a week. I mean, if I find something, I'm going to go to Sierra Trading Post and just add 99 of every single size. I don't care. If I think it'll sell, I'll just buy everything they have. I mean,
He's not kidding, Harvey.
No, I'm not kidding. So, and I really haven't run into a problem with aged inventory too much. I mean, sure, occasionally I get stuff that doesn't sell, but I guess I haven't been selling shoes that long, so who knows? Maybe I have a lot of it. I was actually going to be going through my old inventory and starting. But it's really not that much. It really isn't. I mean, my long-term storage fee ended up to be about $2,000, which is nothing with how much. I mean, it's less than what I pay for monthly storage, so that was fine. I mean, I don't know. I mean, the stuff I sell, I buy sells. I mean, I'm aggressive with pricing. I try to win the buy box. I don't play games where I'll let like some merchant fulfilled seller sit there with the buy box and I'll go higher thinking there's some price. I do that very minimally. Only in December will I do that. I mean, I want to have the buy box. I'll go 5% higher than merchant fulfilled in shoes and match the lowest FBA. And even if I lose money on a pair, I don't really care. I just want to move the stuff. And overall, I'm making between 50-60% ROI in shoes. Which is probably lower than most people, but it's good for me. I don't care. It's fine, and you know what? My profits are going to be higher this year than last year because before I joined Ace last year, I had a ton of money and I had no idea what to do with it. So and literally, well, no, I mean it wasn't you. I mean it was just I don't know. I mean I made a lot of bad buys last year and went deep on stuff that didn't work out that I had to sell for very little margin or no profit at all. And it's hard to mess up in shoes, kind of. I don't know. Maybe it is hard. Maybe I am messing up, but it's just like when I'm going through my low inventory report and it's telling me, yeah, you sold 25 pairs of the blue size 7.5 of this, and I'm sitting here like, why didn't I buy 100 of them? I don't know. I mean, it's in the so of course I can't get them anymore. It's just I mean, shoes sell. It's ridiculous. Right. At the same time, all these coaching calls I'm doing, I don't know if I would do shoes if I was just starting out because it's like you really got to go wide and it's tough to find stuff that moves fast and it's kind of a crapshoot and really it took me about 6 months of buying shoes before I really kind of got a groove going where I was really making money selling shoes or actually moving them quickly just to get a good variety of sizes and colors and all that and styles and brands and all that. So I don't know. I mean, that's why they pay you. I don't know what the heck to do if you're starting out.
So I just want to add one thing before I switch it over to Arya. Shout out to Chris Green, who is brilliant in the simple things that he says. I hang on Chris's every word, and he's really light years ahead of us as far as what he's doing with his life. He told me, when things are not going so great, or even if things are going great, always look to pivot in your business. And I think we did that in June of last year, where we tried to reduce the amount of DVDs and toys we were selling and focus more on clothing and shoes, and this will be a nice segue into Arya. And I just looked at the numbers before we got on. We're at 47% of our business is now shoes, 20% is clothing, and another 10 to 15% is sports and outdoors, as we know has a lot of overlap on clothing and shoes. And the rest is DVDs and toys and home goods and baby and pet products and automotive products and all the other categories that we sell in. And I think we've seen a growth in our ASP from $17 or $18 average selling price to where we're pushing $30 now. So we've seen a 40% drop-off in the units shipped or the units ordered, while we've seen a 132% growth in our gross sales year over year. So it's interesting that the units dropped by 40%, but the revenues rose by 132% year to date versus the first 2.5 months of 2015. With that, I'll hand it off to Arya, who's got a lot of wisdom in his brain and also does not do this full time, but can probably surpass us all if he ever decided to do so.
I appreciate that. I don't know if that's true. So from my perspective, I think I kind of resonate with a lot of the comments that have already been made. I think Anna is definitely the accounting books type of person in the sense that my books are kind of clean, I guess, but it's not because I do anything with them. It's more because, let's call it, I almost outsource it. But a lot of that, again, has to do with this is not my full-time thing, so I spend most of my time thinking about what's going to drive the business and making buying decisions. So I think there have been so many different things touched on. So I wrote a couple of notes that I just want to try and get through. So there's different things. If we're talking about cash flow, I think for the most part, it's really going to vary where you are in the life cycle of you as a seller. And I think, as Christo said, like, have them call you or Jay if they're starting out is very different than someone who has tons of excess cash and wants to know what to be doing with it. I think Harvey last year in Orlando spoke, and I think he's what he referenced here with his post. I don't really know where that post was, but his whole percentage of what is selling of your total inventory, basically on an inventory turn basis analysis is critical, and I think it's something that's really lost on most newer sellers or people who actually haven't really thought about this. And it kind of goes back to, Sam, Karen, and I we were in Amazon headquarters. It was like October of 2014, and they asked the question of like, what's the first thing you look at in the morning in the Seller Central, or how do you think about your business? And it was very interesting to see the different sellers who were there. The guys who have basically businesses that I would call are replenishable, and they're just looking at their inventory stock. Their whole thing was just like, where am I from a replenish level? How much, when do I have to hit the rebuy button to send it back into Amazon and get Amazon more inventory? Whereas the RA people are much more focused on, what did I sell today? And it's kind of, I wouldn't call it haphazard, but it's a lot more, where are my sales at? And I think this is like a key fundamental. If you actually want to grow and leverage your business, you have to start looking at it. It really comes down to inventory management, and I think Harvey and Christos and Karen all talked about it, and until I got Inventory Labs, I didn't fully digest some of like the inventory value, the inventory health, and the inventory value, because in your mind, especially for me, like when I'm doing this part-time, you make the buys, you send them to the prep centers or wherever you're sending them, they go in, they sell, they don't sell, you have no idea. You probably have like thousands of ones and twos just sitting out there, and for whatever reason you no longer are sitting in the buy box, even if you have a repricer, just because you didn't want to sell it at a loss or whatever it is. And I think when you get to a certain point, Crystal's point is spot on. Like, you just want to be turning it. It's a total cash flow thing. If you take a loss 6 months later just to move it, you moved it, and you don't have to think about the inventory, you don't have to think about long-term storage fees, and even forget long-term storage fees. Even if it's only one, you're still paying Amazon rent on that one unit. You're just not paying an excessive rent for it. So I think from a cash flow perspective, when people start out, they're very focused on the ROI. They're very focused on different things. But as many sellers have kind of come to realize, I think that if you compound or turning something over at a 20% return or a 30% return, but you turn that thing every month or every 2 months, you're going to end up way better than if you sat on it for 6 to 12 months and you ended up with 100% ROI. It's just simple, mathematical compounding. And kind of moving over to shoes, I think it's a very interesting thing. And again, Christos kind of talked about how he jumped in and he assumes he's doing well. Listen, we know he's doing well, but at the same time, I think that the point is very interesting, because when new sellers kind of reach out and they say, well, I want to start in shoes, and I kind of caveat it with, like, it's a great category from a perspective of typically you're not going to have more than 3 or 4 sellers on any one, ASINs per se. That being said, even a fast-selling shoe may not turn anywhere near close of a home product or a product in the health and beauty or what have you, just because the demand. Just think about supply and demand. How many people need shoes? How many variations of the shoes are? But the toothpaste, yes, there's tons of toothpaste, but everyone's consuming it. It's a consumable good where the shoe is going to last them 6 to 12 months, and before they come back and get another one. So with that being said, I think it's a very capital-intensive group category, and it's a great category, but at the same time, people who have small budgets have to think about getting the faster turning shoe brands, and it's not because you want to cheat the ROIs. It's really because if you want to grow, you're going to ultimately have to grow your cash flow, and so I think Anna's point of it all comes down to the cash flow statement is true. And for people who don't have an accounting background, it's not like, oh my god, I'm lost. It's just understand what's coming out of the business on a monthly basis. Like, your sales number is great, but what is that actually going to be putting back into your pocket, to not from a profit, but to be able to go buy something to grow that business? So if you're in the shoe section or category, you have to understand that if you're going to sit on a shoe for 3 months and it costs you $100 to buy that shoe, yeah, you may sell it for $200 or $300, but that money is now tied up for real. It's like truly gone. And is that going to hamper your business or not? And that's something that every individual has to decide when they look at things. So I think some of the tools, Inventory Lab, I think is a phenomenal tool. I think now you have the ASIN Inspector and you have Jungle Scout, and they both have pro versions. Obviously, those don't help as much in the shoe and clothing categories. But it just gives you, the idea is just have a benchmark of understanding of how fast they are seeing based on the data, how fast they expect it to turn over. And if it's going to turn over in a slower manner, that's fine, but you need to know your business and need to understand, like, how deep can you go on something. And shoes is something where it's funny that Christos mentioned that he does 99 at Sierra Trading and just buys them all, because that's one thing. I've gone very deep on things. Shoes is not something that, like, I generally, like, if I'm buying 10 of one specific size, color variation, I am, like, that is a lot, because as many people have mentioned, I think Harvey even mentioned it on his e-commerce podcast, Momentum podcast with Stephen Peterson, is just that people don't understand the risk of, it's a multiplication factor of how many color variations are there, how many sizes per color. You may have a different variation, and it's technically a different ASIN, but at the end of the day, you are banking on that style of shoe and that brand of shoe selling. So even if it's ranked, 1,000, understand that, yeah, exactly. Harvey says correlated risk with shoes, because it's completely correlated. It's not uncorrelated. And so I think people grapple with that. And so in the Facebook group that we run, which is a free group, the Your Source Inventory, the analysis we try and do is for people to understand that a shoe that's ranked like 50 or 60,000 doesn't necessarily make it bad if you see that there's actually only one versus 20 colors or 10 colors, and at the same time it can be that there's no actual inventory in stock. A lot of times, if it's an older Nike brand that you're finding at the Nike outlet or something of that nature, it could very well be that there's no supply in there. If you actually look in, no one's selling the 8s through 11 men's. Well, of course the rank's not going to be very good, because that's probably the highest demand sizing of shoes. So I think from that perspective, we try and point these things out. I think shoes is definitely a category that has tremendous value and tremendous growth to your business, but at the same time there's a learning curve and there's a capital requirement from that. So I think understanding your inventory depth and turns is really important to the cash flow, because if you've got dead inventory, it's time to, like, move on. And I think Christos's point is how he made a comment that I think I agree with, and that is, to me, when I started this, I was in a different point than people. I have a full-time job, I have a full-time income, so again, I don't need the income to make, to pay my mortgage every month or to pay my bills. So a lot of times, if I'm making a large buy, like if I'm going to buy 1,000 to 5,000 units of a closeout, I'm okay if that's going to take 2 years, because if that money would be sitting in the bank making 0 to 1% interest, I don't really care if it's going to be now, hey, I'm going to make 100% over a year or two. That return is going to be way better if that was not money that was, like, tied up. It was not allocated for the business originally. So certain things I look at as kind of ongoing businesses, and certain things I look at as investment. So I definitely probably have a different look at things than other people. Oh, I haven't even figured that out yet. So I think for the most part, that's how I think about it. I think newer sellers have different restrictions from, is it their time, is it their money, and if it's their money, they really need to be focusing on what's going to turn the cash back for them.
Arya, now that I have you captive, I just have one quick question. Do you analyze clothing the way you analyze shoes, or is that different?
No, so I do. I actually do more shoes than I do clothing. I do analyze clothing in a similar fashion. I think clothing. What I found with clothing, the two key things that I found with clothing is, the first is that the margin, the ROIs may look better, but a lot of times the profit per item, per unit, tends to be lower than on shoes, just because the things that really move, I find at least, because I haven't spent a ton of time on the higher end brands, are the mid-range to lower end clothing brands. And I guess I look at it that if I try and put myself in the consumer's position. So if I were going to buy a shirt, am I going to buy some, high-end thing on Amazon, the shirt, so that I have to send it back, or am I just going to walk into the store? And I try and think about that. And so if you look at some of the brands that tend to seemingly sell very strongly on Amazon from a clothing, I do a lot of North Face. I love that brand. It sells all year round. It doesn't matter how hot it is outside. People are buying the Denali sweatshirt. I don't know what they're doing with them, but it sells all year round. So I'll gladly buy that any time of the year. But the different the different places, the other brands that I find are much more mid-range brands, so the profit per unit drops a lot. I was going to say it's dead to me too.
I know.
So the brands that sell very quickly, I think, are lower. And so again, it goes to me personally, my time. If I'm gonna spend the time to do the analysis, and I'm only gonna make $5 a unit, but I can make $30 on the shoe, I'm just gonna spend the time making the $30 on the shoe. But I think clothing is very similar. I think you could do the same kind of analysis. We're trying to, in our group, get more clothing going. We actually just picked up a new person dedicated to clothing, because there's clearly demand there. And I think Brittany, who is one of the co-owners of the group with me, she likes clothing more. She finds the returns are lower. She finds it's less of a pain in the neck. There's less of a space issue when you're shipping in. Obviously, this is something actually that I heard yesterday from a reasonably reputable source, and that is that Amazon is toying very strongly with the idea of if you do not have the original box with shoes, you can no longer sell them, even with a generic box. And I know it's been floated around. Yesterday, someone said that they were actually speaking with senior people at Amazon, and the complaints of the non-authentic have really driven this to becoming probably, they say the next 6 months, but who really knows with that? But that will obviously, I think, drive people towards clothing, just because it kind of takes some of the shoe market away. I personally
feel like that's inevitable.
Yeah, and I agree. I think if Amazon is looking out for their customers, which we know they do, and that's the sole driver of their business, they're ultimately going to say, hey, it's not gonna, we can't keep this, which is kind of ironic, because 2 weeks ago I bought a pair of shoes from Amazon for myself, and Amazon was the seller, and it showed up in a generic box. So. It was a little bit comical, but
maybe they commingled. Okay, so that was great, Arya. I just want to add one thing, and then I'll kick it back to KIB. There is a distinction in clothing. There are certain clothing that are replenishable. So we're talking about socks, underwear, bras. Obviously, is a big category. T-shirts, undershirts. Those are more replenishable than, let's say, a Nike sweatshirt. So there are faster turning clothing than other types of clothing, just to keep that in mind. We sell thousands of pairs of socks. We sell thousands of pairs of underwear, thousands of bras, thousands of T-shirts and undershirts. So I just want to point that out. And then there's obviously seasonal winter and summer bathing suits and hats and gloves and scarves. So obviously keep that in mind. Karen wanted to add something to what she said earlier.
Right. Thank you for letting me come back on. I wanted to say that by referring to Anna's pretty books, I think I may have given the wrong impression. Anna is absolutely not about having pretty books. What she is about is having access to the data that should be driving your business. She's not going to care if it's pretty or what it looks like. So I came back to say that if you don't have that intuitive understanding of what you are doing with your cash flow, then you need another way of looking at it. And having books is a great way. The other thing is that if you're going to be looking for financing for your business at any point, that is absolutely what a lender is going to be looking at. They are not going to be impressed by me slouching in there and saying, well, but I just know if you give me $50,000, I can turn it into $100,000. I just know it. They're going to want to see cash flow statements, profit and loss, and the rest of it. And I was just, I felt that I'd somehow demeaned what Anna did by referring to it as pretty books, because it's really so very much more, and I've learned a lot from her. Thank you.
I think everyone here is highly intelligent, and I think a lot of what we do, it comes down to getting good information and good data and making good decisions for the right reasons, and letting the chips fall where they may. None of us are perfect buyers, but we do enough analysis where we're right more than we're wrong. And I heard an interesting tidbit about our favorite toy seller, Burg. I was talking to one of the senior reps over at Mattel, and they explained it to me this way. Burg makes money on 60% of their products. On 20% of their products, they break even, and on 20% of their products, they lose money. But overall, they're making a boatload of money, according to the senior rep at Mattel. So I think that goes back to what Christos said about, for the most part, he's making a 50-60% return. There may be certain shoes where he's losing a little. There may be certain shoes where he's breaking even, but for the most part, he's making very healthy margins on his shoes. And I think that's a very good business model when it comes to selling on Amazon. You're not going to be right 100% of the time, or maybe not even 80% of the time, but if you're right 60% of the time and you're making very healthy margins, and 20% is break even and 20% is at a loss of, let's say, 10 or 20%, I think at the end of the year you'll have very healthy profits. I just wanted to let Jay speak for a few minutes because he does a lot of the coaching. And we have clients as big as Christos that do a few million a year, and we have clients that are doing, 10, 20,000 a month. So there's obviously different strategies for different people. I just spoke to a client. He's like, I have 6 figures in the bank. I need to know how to deploy it. And then I speak to a client that says, I have a $12,000 sourcing budget for the next month. I need to know how to deploy it. So there's obviously different strategies, and we give a very detailed questionnaire to our clients to get a better feel of who they are. Are they comfortable retail arbitrage, online arbitrage, wholesale, liquidation, or private label, what their sourcing budget is, what their time allowance is. A lot of people are still doing this part-time and want to do full-time, and a lot of people are doing this part-time and want to continue doing it part-time. So Jay, if you could jump in here, and then we'll open it up for Q&A afterwards.
Yeah, sounds good. Thank you, Sam. So I have talked to all of our clients, and really knowing your numbers is one of the things that I try to drive home. It's really the roadmap for this business. I feel like most of the people who I've talked to at one point or another are making decisions based on what they were told by the FBA community was the right decision. 100% is the right ROI to hit, or we tell them shoes is the right category, and just based off of hearing that information, that's what they use to make their business decisions. And ultimately, we're trying to convert them to the mindset of understand your business, understand your numbers, understand what your business's needs are, and that should be what drives the decisions you make. It goes with Christos having time being such a factor, drives how he buys. And, understanding that if you have a limited amount of capital and you throw it all immediately into shoes, you're probably going to be sitting for a couple weeks waiting for a disbursement with very little to do. You know what I mean? Really understanding what your capital needs to do, the amount of time you have, the amount of money that you have, and what, how those two work together. And if you have more time than money, being able to take that money and get a higher return on your investment and a higher margin because you have the time to be picky and take only the better deals. And as you grow and grow, that starts to shift in the other direction, where you start to have less and less time and more money, and your pickiness can change, and the ROI level that you take can change. How quick it can turn, how quick it will turn, can change. But it all starts with having an understanding of your numbers, from the beginning. A lot of times, Sam mentioned the questionnaire. We'll ask them questions like, do you know how much you have in inventory at Amazon that's sellable? Or, they'll have no idea what the answer to that question is. They always know what their biweekly disbursement is, and they always know what their general sales are, but they really don't necessarily have a working knowledge of what their inventory is, where their inventory is at. We had a client in office, I want to say last month, who
Yep.
we asked him how much he had in inventory, and he was like, I don't know, it couldn't be more than 20, 30,000. And when he actually ran the numbers that night in Inventory Lab,
I did it.
oh, okay, Sam did it. What did he end up having?
About 160,000.
Yeah, so
And he was trying to figure out where all his money went. And I was like, well, how much do you have in inventory? And he's like, can't be more than 30,000. I'm like, do me a favor, send me your Amazon Inventory Health, send me your Inventory Lab. And we did a simple equation in Excel, and we figured out his inventory. And he was shocked, but he was his business was a lot healthier than he thought it was. And he knew he was, on the right track. So I think, knowing your numbers is a huge, huge part of this business. A lot of us, know exactly to the penny how much we have in the bank, how much we have in inventory, how much we have coming in from Amazon, whether it be daily or biweekly, how much we owe out on credit cards or on vendor terms. And I think that allows you to make better decisions. Like Anna said, like Karen said, like Arya said, like Christo said, and like Harvey said. Anna, is there something you want to add about?
Yeah, I just want to add one quick thing. I think after this call, if you don't mind, I'm going to write a little summary post about some of the things that I want to share so people can read it in detail. First, know that if you're using QuickBooks or Xero or something like that, there is a cash flow statement that generates just like an income statement generates, just like the balance sheet does. You literally press a button and it does it for you. But in general, here, I'm going to read it just so I don't get it wrong, but here's the trick. So everything you guys are talking about has to do with operating activities on the cash flow statement. So if your operating activities, which include buying inventory, payments to suppliers for goods and services, payments to employees, and interest payments, if the cash from those operating activities is consistently greater than your net income, then your net income or earnings are said to have high quality. If they're lower, there's a problem. So I'll put it all in a post for you guys. If you have the software, look at your cash flow statement. If you don't, look and compare when you're buying inventory, suppliers, employees, and paying interest. Compare that to your net income, because you want the cash from the operating activities to be greater than the net income. That means you're turning cash and your business is healthy. So I'm going to write a post after this and I'll share it.
Okay, great. Arya, what do you got for us?
Are there any questions? It's probably easier if I answer a question.
Jay, are there any questions in the Facebook group, or I don't see any in this chat? But
no, there's a couple of questions. I know Lena Wasserman had asked what Arya's Facebook group is. Somebody already came in and answered that it is Your Sourced Inventory. Is that the group you kept referring to? Is there another group?
Yeah, no, that's the group.
Okay.
And REA has a paid service. It's $150 a month. It focuses mostly on shoes and clothing. And there's some tremendous. Arya, can you share the stats of what last month was? Average selling price, average ROI, average sales rank?
Yeah, so I'd have to pull up. We tend to do it at the end of the month, and I'd have to pull the numbers exactly. But we guarantee that shoes are always under 30,000 rank. I'd say that we probably are averaging in the 8 to 10,000 rank for shoes. Clothing, it's a little bit higher, but I would say the list is skewed probably 80-20 to shoes, clothing. We intend to try and mix that up a little bit based on some feedback. The average profit of shoes, I think, was probably mid to low 30s last month. ROIs we guarantee are over 50%, but they typically are hanging out around the 90% range. We typically make a post once a month inside that group, just giving statistics so that if people have an interest in getting it, I just actually haven't done it
Sorry.
recently. No problem.
Yeah, your numbers are incredible when you post them. I wonder why we're not buying a lot more, but we are. Christos, what do you got for us?
Nothing. I don't know. What
Closing statements or?
What the heck was I gonna say? I forgot. Sorry, I'm an old man. I forget what the heck I'm gonna do. Lose my train of thought a lot.
It's all those.
There are a couple other questions I can run through really quickly. The question for Anna. Tim Carroll wants to know, how do you define cash? Does it include real money, gift cards, loans, etc.?
Cash is your bank balances. So, gift cards are an asset, but it's not as liquid as cash. So I'm talking about your checking balance. If you have several business checking accounts, it's all of those combined.
Okay.
Harvey, what do you got for us?
I just made a couple notes when everybody else was making their points and some of the questions that you asked. One of the questions was, you said clients will come to you with, I have a relative or whatever gonna, wants to make a cash infusion into my business. Like, what do I do with all this money? I mean, I would say, do more of what you're currently doing well. Don't completely change your business model and just jump into shoes or clothes just because you have a lot of money and want to spend it quickly if you don't know those categories. So, based on what REA said and the correlated risk and the capital intensiveness of shoes, no matter how much money you have, I think you should dip your toe in, slowly when it comes to shoes. Anna just touched on this. I'm always evaluating my business, and I found one of the weaknesses is I have a large gift card carry right now. Like, I have over $10,000 in gift cards, which hurts my, my cash in the bank. So one thing I'm working on, this month is don't buy any more gift cards until I go exhaust all the gift cards that I currently have at every source and get that money into inventory. Based on what REA said, he gets a lot of questions in his group about, we got shoes, we got rank, we have variations, we have, how many sellers, we have is Amazon on the listing and things like that. And that can sometimes be very intimidating, as a seller, especially if you're just getting into those categories. I look at it as, a barrier to entry, and one of my skills is being better with incomplete information than other people. And those categories have the most incomplete information. So if you study those categories and gradually build your knowledge and talk to people that are better than you, in those categories, and can offer you insight, the fact that they require being good with incomplete information, to me, becomes an advantage for me versus a disadvantage, because there's nobody playing with a full deck in building,
Interesting choice of words, yes.
If you can be better with the incomplete information, you can really do well in those categories. So don't look at it as necessarily a negative, because if all the information was complete, none of us would make any money, because everybody would know where to go buy anything they want for the cheapest price. So we all make our money on incomplete information, and those categories, in my opinion, offer more opportunity based on their breadth of incomplete information. And lastly, just based on something you said, if you aren't making some bad buys, you are probably not buying enough or buying wide enough. If you've never made a bad buy, I would say you're either too risk averse or too narrowly focused. We all make bad buys, and we learn from them. And if 5 risky buys, one of them ends up being bad, and the other 3, return 120% because the rank was terrible, but I said, that's a discontinued product that nobody's had for 6 months, and I just found a bunch. It used to be ranked 20,000, and I make a big ROI on that. That more than pays for the one that maybe didn't turn out so well. So those are just some points I had based on what everybody else.
I just want to add a couple of things before I kick it over to Karen. Jay is very bullish on studying the reviews, seeing which colors and sizes and styles are getting the reviews. There's a lot of information in there, and we're also very big on fits as expected as a barometer of whether or not we should buy something. If we see something with a 50% or 60% fits as expected, you could assume you're going to get a lot more returns than something with an 85%. So those are two important things I wanted to add. Harvey said something very important, which we always tell our clients. Don't abandon what got you to where you are today. Don't just run and do shoes and clothing because you think those are the sexiest categories. If you were doing groceries or if you were doing something, DVDs or toys, don't abandon it. Keep doing what you're doing and supplement it. Add to it. Don't leave one thing to do another because you'll be left. We had a client who did that in the beginning. He was doing groceries and he said, "Oh, I want to do shoes like all you other guys." And he stopped doing the groceries, and shoes didn't turn as quickly, and he found himself in a pickle. Luckily, he regrouped after I yelled at him a few times, and he's doing great today. So I just wanted to add that caveat to stop chasing all the shiny objects and abandoning what brought you to the dance. Karen?
That's a great point, Sam. But at the same time, I think you have to recognize that what got you to where you are on its own is not going to get you to the next level. So you keep doing that and you add other things. That's a great message. The other thing is kind of a riff off some stuff that Christos said, because I think we probably all agree that despite never touching a product, he's much more involved in his own business than many people are. And there's something that you hear all the time in the Facebook groups, that you should work on your business but not in your business. And that's true to a point, but it's not an overnight thing. You don't suddenly just wake up one day and decide, okay, I'm going to work on my business, forget this in my business stuff. Because for me at least, the best way to really understand what's happening is to do a lot of it yourself. Some stuff you can outsource, some stuff you can't. And I would say that cash flow management is the one you can't. And one more thing, many people question why I use Feedvisor for repricing, because it is so ruinously expensive. One reason is because it is very, very, very good at these analytics. That, beyond my intuition, that's kind of where I go to when I want to see my numbers and want to see what the contribution of a particular ASIN is. So I feel like I pay for that in, I would be paying for it in other ways. So.
And I think all seven of us up here can agree that information equates to money in this business. If you have good information, you have good analytics, you have good resources for information, study the historical sales rank, study the historical price, make sure it's not an aberration, because sales rank is a snapshot in time, as is the Amazon price. We have a lot of wholesale accounts that offer us pricing, and we know for a fact that they're basing it on the Amazon pricing, because every time we put it into FBA calculator, we see we're getting exactly a 40% ROI, which is not possible if they're just marking it up the traditional wholesale amount. So just keep that in mind. Think of it like the stock market. Think of it like, a chart of historical sales rank, of historical price. And then, as Arya or Christos or anyone up here will tell you, you can better predict what it might do in the future if you know the past of it. It's not a guarantee, but we've seen some crazy things on Amazon, both with things skyrocketing like Pie Face selling for $70 a couple of months ago, and we've seen things like 3D printers that we bought on there for $450 that sold a week later for $999. So there's crazy things happening on Amazon. I try to tell clients it's a very dynamic marketplace. You have to be entrenched in your business. I have two 27-inch monitors on my desk. I feel like I'm an air traffic controller or a video game player for a living, constantly zigging and zagging and changing prices and changing directions and doing a million other things. You know, you kind of feel like a day trader. You kind of feel like an air traffic controller. And there's a lot of information. You know, obviously we experiment with many different things and we follow the money. We make a lot of mistakes, but we also make a lot of, you know, good decisions. So I think, you know, Christo said it and Harvey said it and Arya said it. You know, if you're not making mistakes, you're not making enough decisions. You got to be decisive. I'd rather be decisive and wrong than indecisive in this business, because when I'm wrong, it's going to teach me a valuable lesson. It's not going to be a mistake that's going to put me out of business, and it's going to help me grow in the future, and I'm a much better buyer than I was yesterday or the day before. So having said all that, does anyone else want to add anything? Or are there any questions that we feel we should answer?
There's another question or two from the group. Bruce Farkas asked, and he wasn't sure if this is too technical for this discussion, but would it be possible to discuss Amazon 1099K reconciliation reporting?
Christos had to run out. Anna? Or...
Yeah, I have a post in my group that walks you through step-by-step how to do that.
Okay, and just to reiterate, Anna has a completely free group on Facebook called Accounting We Will Go, which is an incredible source of knowledge. I literally find myself reading the threads in her group just to better acclimate myself to all the different accounting obstacles I face on a daily basis, and it's been a tremendous asset to our business. It definitely puts me to sleep at night, but it also, you know, it helps me sleep at night, so it's a good thing. And I know I read Arya's post and Christos and Harvey and Karen. Yeah, you guys are an abundance of knowledge, and I thank you all for sharing your time and your information and your knowledge and your energy and your positivity. And you know, I'm just grateful to be in the same room as you guys, even if we're not in the same room.
So that would be the sum of the questions. I know Anna had mentioned that she was going to post some things. I don't know if anybody else has any materials that they use to kind of keep track that they find particularly helpful, or, you know, something like the day and a half or the day, excuse me, the daily. I've lost my words. Like Harvey's daily inventory turns. Any materials like that, I'm sure everybody would be insanely grateful for.
I just want to add one thing. I'm sorry, Jay. We had a client call in a panic last week, and he had I don't know if he purchased a spreadsheet or if he was using a spreadsheet, which was supposed to keep track of his profits and his losses and his income and expenses, and the way it was calculating was wildly inaccurate. So I don't know if Anna, if you or any of the other experts here has a particular spreadsheet where you could input gross sales and Amazon fees and cost of goods sold and, you know, all those other things. But I think that would be a tremendous asset for people to play around with.
Yeah, I've got a couple in the files in my group. One is kind of a tax prep template if you want to get an estimate of your taxes. There's also the spreadsheet you talked about. I have a couple of other spreadsheets that help with inventory. I really think if you want to grow and manage your business, having an official accounting software is the way that you need to be heading, but there's nothing wrong with having spreadsheets as an intermediate step. Like Karen said, I don't judge other people's books. I try to help people where they are. Yes, I do have pretty books, and I know it, but I really encourage people to do something more than what you're doing now. Don't feel like you have to go crazy and get QuickBooks or Xero, but at least do something. So go to my group, look in the files. If you don't see what you're looking for, I take requests all the time to create spreadsheets. All the time. I don't ever want someone to have to pay for a spreadsheet when they can get it in my group free. And there's nothing wrong with paying for a resource, but you know, something that's just a simple math exercise is not something that should be paid for. Ask me, I'll create it for you. Come to the group, nerd out, read the files, read the post, look at the 1099 reconciliation. There's even posts about how to reconcile Inventory Lab to your Schedule C, year-end steps, why you should calculate cost of goods sold manually instead of relying on Inventory Lab, how to analyze the difference, all kinds of good stuff. So come join the fun.
One other point on this, Anna's stuff is way better than what I'm about to suggest. And there's obviously Seller Central has reports that you could spend about a month trying to figure out what's going on in all of them. But one of the things I think, again, this is more on the newer side, if you actually go into your Seller Central under reports and you actually go on the payment tab, and I know there's been a lot of discussion that they removed something from the Seller Central main place to get your payments, and now a lot of people have to go here. But if you go on that payment, there's the statement view, and then it shows you all the statements. There's another link in there that says all statements. You can actually download all your whatever it is your payment, however frequent you get paid, whether it's biweekly. Like I'm on daily, so it's erratic if I request it daily or not. But if you go in there and you download it, it kind of breaks down a lot of the fees that I think people kind of forget about and don't think about too much, or at least don't focus enough on. So it's obviously a little bit higher level. It's not going to tell you what your per unit shipping cost is, but it's going to tell you about all your inbound shippings. It's going to show you a lot of the refunds that you've gotten. It's going to show you where they break out their fee on every order. So again, just knowing what's going on in the business, because I think that's another thing that people kind of get lost on, and that is they do some sort of back-of-the-envelope calculation when they buy their inventory, and then they actually have no idea what's really going on post-transaction. For example, like I was selling a large stuffed animal for many months, and I knew the cost, I knew how it was running, and I don't know what prompted me, but I looked at what I was getting paid out on that, and I knew something was wrong when I saw how little it was. I was expecting it to be about 2 or 3 times that, and I saw that the weight fee that they were charging me was way off, so I immediately submitted a case to ask them to reweigh it, and then they obviously changed it, adjusted it, but they also refunded me for all the transactions that they had misdone. So again, these are, some people have people running their businesses in different ways. They have VAs, they have accountants, these are little things though that it's going to recoup money along the way that you should be getting. So if you pay attention to this for a little bit and you can see the trend, even if you're not doing it on a weekly or bi-weekly basis, it again will kind of get you places where you're missing the boat, or at least not paying attention.
Awesome. Harvey?
I have as far as spreadsheets, I have a projection spreadsheet I can share. I may have shared it before, I don't know, but it can just with a few simple inputs. You can see how much inventory you're going to need at a certain ROI, at a certain turn rate to achieve a certain level of profits. Some of the sellers have liked that. I can provide that for the group if that helps.
Thank you so much.
Yeah, that'd be awesome.
I just wanted to add, getting back to shoes, because obviously a lot of people are in shoes right now. It is a tremendous capital expenditure to get into shoes on a very large scale. Most of our money is tied up in shoes right now. We looked at it the other day, Ike and I. We have between 6,000 and 8,000 unique ASINs, and we have between 10,000 and 15,000 pairs of shoes in inventory at Amazon. So when you figure an average cost of $40 to $50, that's a lot of money. So just keep that in mind. I know everyone wants to do what's sexy and what's profitable, but just keep that in mind as you're growing your business and you don't have unlimited capital, because none of us do. Definitely keep that in mind, that it's a different game when you're playing with shoes and clothing and North Face. And North Face, you're buying something for $80 or $100 and you're hoping to sell it for $180 or $200. Just keep that in mind. I also wanted to touch on two last things. One is loans. A lot of people are being offered Amazon loans. We probably should have had Dwayne Malik here as a counterpoint. But I think most of us will agree that if you have a plan and you have good systems in place and you know what you're doing for the most part, it's not a bad idea to take a loan, assuming all those other factors, from Amazon or even Cabbage at some point, if the rates aren't exorbitant. And I think it'll help you grow your business if you have a plan and you know what you're doing. There's people like Dwayne Malik and a few of our clients who are risk averse and debt intolerant, and they don't want to owe out any money, and they're on an all cash basis. That is another way to grow the business. It's a different school of thought than oh, you're lending me $100,000, I'm going to turn it into 200,000, and I'm going to pay 10% for that privilege. So just keep all that in mind. Definitely talk to someone like Jay or myself who get calls every day from clients and from non-clients saying Amazon's offering me a loan, or my in-laws are offering me a loan, or someone wants to invest in my business. Definitely make sure you have a plan rather than just taking the money and spending it wildly, because you'll find yourself in a whole lot more trouble if you've now borrowed money and screwed it up.
One real quick thing I just want to add to the first part of what Sam was talking about there with shoes and clothing working a little bit differently and being a high capital investment is, understanding that does not mean that that is a weakness of the category. It can be used as a strength of the category if you know what you're doing. If you plan how you build your shoe inventory, you'll get to a point where your shoes have paid for themselves and you have an ongoing inventory to sell moving forward, which is, actually value in your business as opposed to, the things that you do that turn every single month that you make that profit that month, but there's nothing growing moving forward except for that capital. So just
good point. Christos?
Yeah, that's a really good point. When I buy a shoe or I go shopping at like a store and buy a lot of shoes, in the first 30 days after shopping, I expect to recoup the cost of goods. In the second 30 days, I recoup my FBA and Amazon fees. And in the last 60 to 90 days, that's when I make my profit. And I plan financially as such. And that's why you got to start slowly, because now I can pretty much spend whatever I want because I have 6 to 12 months of all of those same things in place that I'm getting paid profit on now for investments that I've made. So that's the way I think of it when I'm sourcing shoes, and I ask myself, can I afford to not get paid myself on this buy for 60 to 90 days? That's how I approach my shoe buys.
That's a tremendous way to look at it. I think we all understand, or we all should understand, what a pipeline is. The more inventory you put into the pipeline, the more it'll feed you in the long term. But there is a sales cycle, which is definitely longer in clothing and shoes than there is in toys or grocery or HBA or replenishables. And I think the sales cycle needs to be understood. I also just want to touch on logistics before I kick it off to Christos. We've put systems in place that are incredible right now. We struggled with it for a very long time in our old place. We moved into a place that was 6 times the size of our old place. We got pallet racking, we got computerized, we got organized, we got inventoried, and we put systems in place which we'll be more than happy to share with all our clients and experts, which literally allows, even if we have Jackie and Harry and Jay and Ike and Michael and myself and Neil, 7 people buying from Amazon Flips and OA and RA and wholesale and liquidation, it allows us to get everything out of the door within 24 to 48 hours. And we're seeing stuff that we bought at a Nike outlet on Monday, getting out on Monday or Tuesday, getting to Amazon on Wednesday, and selling on Wednesday. Well, that's a 2-day sales cycle. In a perfect world, that's 182 inventory turns a year. If you can get that going, your numbers will grow exponentially. And I think that's logistics plays a very important part of cash flow and cash management and compounding returns on investment. And anybody who does financial modeling, like Harvey, Christos, Anna, Arye, Karen, I know you guys all do it in Excel. You can really see numbers. If you get a 20% ROI, even if it's not 100% ROI, but you could turn that 180 times a year, or even 50 times a year, or even 20 times a year, you could see how those numbers multiply exponentially. Christos wanted to touch on loans.
Yeah, to just touch base on what you're talking about. Yeah, obviously that's the ideal situation, is to turn your money quickly. It's not always easy to do that. And my business model, a lot of it has been just looking for things that'll, obviously finding things that'll sell and just buying a lot of them, buying 2 or 3 months supply of it. If I look at like the number of items I have in inventory, roughly, I probably turn my inventory about 3 times a year. It's about 3.5 to 4 months of, if I look at how much I sell every month versus how much I have in inventory, which I'm sure people do it better than that, but I mean, that works for me in terms of the amount of time I put into it, and I make a good living doing that. As for, I mean, it all depends on what your business model is, what your risk tolerance is, what you're trying to achieve, blah, blah, blah. I mean, there's no, that's the thing with a lot of this, there's really no right answer. There's no right answer, there's no wrong answer. You just kind of got to figure out what works for you and go with it. And I think I found something that kind of works for me. I mean, anyways, about debt and everything, I know there's lots of schools of thought about debt. I'll give you my school of thought, which is, there are 2 types of debt. There's consumer debt and there's business debt. When you are taking personal credit cards and going to bars, going to nightclubs, going to restaurants, going to strip clubs, going to wherever the heck you go to, you're spending money on consumption. That is bad debt. When you are taking business credit cards or even your personal credit cards and buying inventory, you're buying a capital good, which is not a consumable good, which is a completely different thing in economics. And that's something which is an asset which you are going to use to sell for a profit. So it's technically not really debt. I mean, you have an asset that's balancing out that other side of the balance sheet. So obviously you want to make good decisions buying inventory. But I mean, if you look at the richest people in America, the biggest difference you're going to see is access to credit. And they have access to credit, and they take advantage of that access to credit. And you can run your business all cash, and you could probably do very well at this. But it's going to be you're going to have a much easier time growing and growing and growing quickly, and maximizing your potential if you do take out loans and take advantage of that access to credit. And also, adding on to what Karen said, or Karen mentioned this, is that, if you keep good books, you're going to have a heck of a lot easier time getting that credit. You can go to Cabbage. Cabbage will just look at your Amazon seller account and lend you money based on that. But everybody else is going to want to look at your balance sheet and income statements and all that. And, because my books are better than Sam's, Chase lent me more money than they lent him. So, that's
true.
And he makes more money than I do. So, I mean, there you go. I mean, there's a testimonial for you.
Not according to my taxes. No, I'm joking. Is it safe to say you've taken 7 figures in loans in your 4 years in this Amazon business, Christos?
Well, not at one time. I mean,
no, cumulatively.
I don't even know. I mean, I have lines of credit, so you borrow and pay them off. I mean, it's not really.
Right. Okay, so. But you've taken 6-figure loans. Yes. And paid them back through your Amazon.
Yeah, I mean, my first Amazon loan was for $170-something thousand, and I borrowed it, didn't know what to do with it. Mostly I just bought Amazon flips with it, because you can buy stuff very quickly. I bought a lot of, this was like right before they pulled the plug on buying as many shoes as you want. I remember buying these Reeboks ranked 100 for like $18. I was selling for 60, and I was buying 40 of this size, 50 of this size, 60 of this size. It was really nice. You can't do that anymore. That was like last year in like February when I first started selling shoes. Wow. It's gotten a lot harder now. And I got to say that about shoe turns. I know you buy 1 or 2 of each size, but man, I sell 12, 20 of certain colors and sizes all the time a month. I mean, if you source right, shoes sell fast. I mean, some of them won't sell at all, but if you make good decisions, you can sell a lot of shoes, and I'm not afraid to do it. And and it's. Right. And if Sierra Trading Post had all these Tevas that were MSRP $80. They had them for $20 the other day. I mean, there were some styles I bought 24 of, certain sizes and stuff, and they're probably going to be gone in a month or two. They're all water shoes. I mean, they're going to sell by the end of the year.
That's awesome.
It's a joke, and and I keep telling people I go to that site, and I still go there and find stuff. I mean, they just got all these Hokas back in stock. They don't have them in stock anymore now. I mean, they're all gone. I mean, because I bought them all, and that's what that's how with all due respect for REA, that's how you battle the prevalence of these sourcing lists and everything. You just buy out the supply of things. So let people post it on these lists. I don't care, because they're not going to get any. So it's all gone by the time I'm there. So. I don't know. That's the way I do things. So.
All right. I think, Aria, you got to go soon. I just wanted to reiterate what Karen said, because she always has words of wisdom. You have to do what works for you and your business. Don't try to emulate Christos or Harvey or Karen or Aria. Do what works for you within the confines of your life and your lifestyle and your budget and your time constraints and your family obligations and your work ethic and your processing ability and your capital, sourcing and, capital funds. And you really have to custom tailor it to your individual needs. You know, we have clients that come in and they walk with a cane and they're 70 years old and they're like, listen, I'm never doing retail arbitrage. You got to teach me online arbitrage. And we have one client, he was only doing books, and now he's transitioned to online arbitrage, and he has kids and people working for him that do retail arbitrage, and he was able to make that transition. And then you have guys like Harvey or Karen, I don't know how she does it, or a Goose, and they run around like crazy to stores, and they can buy, you know, 1,000 of one item by hitting 10 or 15 stores, and really capitalize on something with a fast turn, good sales rank, good ROI. And if there's a post, you know, or if they find an item, they can really multiply the return on investment by grabbing all the ones in the Northeast or the Southeast or wherever they are, and that really multiplies your return on investment exponentially, and it eliminates the struggle of, you know, when I picture retail arbitrage, I picture hunters going hunting out for food every day. You know, so every day is a new battle where you have to hunt for food, and if you don't find it, you may not eat that day or in a week or a month from now. But if you can multiply your return on investment, if you find an item at a Home Depot and you can hit 10 Home Depots and pick up 200 of a $70 item that sells for $150, well, you just multiplied your return exponentially, and you've eliminated, you know, some of the challenges that people say you can't scale retail arbitrage or online arbitrage. Christos, all he does is online arbitrage, and he does it, you know, on a wholesale level. He'll buy 2,000 of one toy at the Disney store, and you know it's a pretty big gamble, but he's usually right more than he's wrong. Or you'll get Harvey or Karen or a Goose, and they'll run around, they'll pick up 2,000 pie faces, and they'll wait for their price, and they'll make their money on the buy, not on the sell. So just keep that in mind. There's a million ways to skin a cat. There's a million ways to make money selling on Amazon. We all do it differently, somewhat, and thank God most of us are successful at it. Arya, do you want to add anything before you have to bounce? No? Okay. Harvey, Karen?
I'm straight.
Anna? Karen?
I'm good. Thank you very much. I found this illuminating. I'm sure all of your clients did too.
Okay, if anyone has any questions, everybody here is in our group either as a client, Christos, or as a contributing expert. I'd imagine Christos is also a contributing expert. I've heard about some of his coaching calls where he swears he doesn't know what he's doing, and he, much like Karen, she claims not to be an expert, but she's an expert in everything. So I want to thank you all for your valuable time. We gave you almost an hour and a half of everyone's time. A big thank you to Karen and Harvey and Mitchell and Christos and Arye and Anna and Jay. This has been incredible in my humble opinion, and I hope people got a lot of value out of this. And we're all available via Facebook if anybody has any specific questions or any challenges that they face in growing their Amazon and e-commerce businesses.
Security deposit.
Jay,
Okay.
you want to wrap it up?
Yeah, I think you did it perfectly. So I'll just thank everyone again, like you did, and then I'll hit the stop broadcast button.